Good morning to all. Today, the team teaching Income Tax 2 topic is assessment and its procedure. So, what is assessment? As per income tax preview, assessment means analysis of income of person, or otherwise, every assessee should submit the details of income to the assessing officer. That is called as assessment. Types of assessment, that is self-assessment, assessment by the assessing officer, summary assessment, regular assessment, scrutiny assessment, best judgment assessment, reassessment, faceless assessment, jurisdiction-less assessment. So these are the types including in assessment. So all the assessee should make the assessment under any one of the assessment. Types of return to be submitted under self-assessment. That is the first assessment, self-assessment. So almost every assessee go with this assessment. Under this assessment, section 139 and section 142 and 148 should be followed. That is, every assessee should submit the return under section 139, that is obligatory and voluntary return. Almost we saw the return of income. So regarding this, voluntary return is very, very essential or very, very important to all the assessee. So 139 deals voluntary and obligatory return of income. Under section 142, return to be prescribed form. So that is, every assessee should make a prescribed form, ITR forms. So in particular assessee, they can fill the particular ITR forms. Then written under section 148, written in response to notice. The assessing officer make a notice to the assessee regarding any mistake or regarding wrong information. So anything should be wrong to submit the return of income by the assessee to the assessing officer. The assessing officer should make written under section 148. They may be give notice to the assessee. Self-assessment under section 140A. If an assessee complies with an ordinary tax obligation, he can make self-assessment. So every ordinary person, every ordinary tax obligation made by the assessee, they go with 140A. That is self-assessment. On the basis of return, an assessee finds that some amount is payable as tax after adjusting. That is tax deducted and collected at source. So the both are tax deducted and collected at source, means they may be deducted at the time of receiving prize money or getting the income from any other persons. They may be deducted after deducted, they may be receive the remaining balance. Collected at source, sometimes they may be collected by the person, those who are giving the amount to the particular persons, or maybe tax in advance. Some persons, some business people may pay advance tax before submitting the return of income annually. Then tax relief. So tax relief under section 89. So many persons get the relief from section 89. Then double taxation relief under section 90, 90A and 91. Then tax credit under section 115 JAA and 115 JD. So these are the information on the basis of return. An assessee finds that some amount is payable as tax after adjusting. Then previously relating to self-assessment for return under section 139, before submitting the return, every assessee should submit the return. Before submitting the return, these are the informations, these are the rules or steps to be followed by the assessee. That is, total income must be computed. What do you mean by total income? All the heads of income should be added. That is called as gross total income. After getting gross total income, they may have or the income tax department should allow the deduction under section 80C to 80U. So what are the deductions available under the particular assessee that should be deducted? After that, that income is called as total income or taxable income. So that is the first step, submitting the return, before submitting the return. So first thing, we should calculate the total income. Then second step, they must calculate the tax liability. What is tax liability? After getting taxable income, the tax liability should be calculated. The tax liability should be fixed by the finance department. In case of tax liability, that may be new regime and old regime. If the assessee go with new regime in the last assessment year, they should follow the new regime, or either new regime or old regime should be followed. Then after tax, find the tax liability, the assessee should pay any interest payable during the previous year or during the current year. That should be added. After that, they may be tax deduction at source or advance payment of tax. If suppose the assessee should pay the TTS regarding the winning monies, or they may be paid in advance tax by the assessee, that should be deducted. Then last one, computed tax must be deposited. So after that, the remaining balance is called as tax payable by the assessee. The amount should be paid by the assessee or deposited by the assessee to the income tax department through online. Provisions relating to self-assessment. So before going with provision to self-assessment, they have to calculate the 5 things: total income, tax liability, interest payable should be added, TTS should be deducted, and then finally tax should be deposited. So now we will see the provision relating to self-assessment for written under section 139. So in case of provisions regarding with 139, 142 and 148 regarding self-assessment. So now let us see the provision under section 139. At the time of filing of return, the proof of deposit must be attached by the assessee, and also adjustment must be made for interest paid or payable. Next section 142. The return is to be submitted according to the notice of the assessing officer for the purpose of fail to submit the return. If the assessee fail to submit the return on due date, or fail to submit necessary accounts and documents along with the return. So every assessee should submit the return along with the necessary document to the assessing officer in accordance with the return of income. If suppose they fail to submit the necessary documents, they must give a notice by the assessee to the assessing officer to the assessee. Okay. Then social audit to be conducted. Some return need to be social audit. If necessary for regarding social audit, they should be conducted. Then next one, consequences for not making self-assessment. That is, consequences means every assessee should fails to submit the return or follows the assessing officer, they must face the consequences. What are the consequences for facing self-assessment? The number one is penalty. Penalty put by the assessing officer. The number two is payment of simple interest at 1% per annum. So they must submit the return or anything, they must pay the interest for the taxable amount at 1%. Then payment of self-assessment tax. These are the provisions relating with self-assessment. Thank you.